Hello, my name is Paul Reeder and I'm the Senior Director for Careers in Finance in Darden's Career Development Centre. Today we're going to be looking at careers in asset management. What is asset management? Often it's referred to as the buy side because these are the people that buy, own and manage assets, financial assets. As you can see, there are several different flavors of the asset management industry. I've listed them quickly here. But if we move on, we'll see that one of them is absolutely dominant. That is referred to these days as the traditional investment management industry. And we will be going through each of these, but it is worth bearing in mind that when you're looking at venture capital, just how small it is compared to that traditional investment industry. Let's start with the traditional investment managers. Typically, they're investing in publicly traded equities and debt securities. So think mutual funds, index funds, ETFs, or exchange-traded funds. A couple of good examples of these companies. BlackRock manages $6 trillion. AUM stands for assets under management, is a measurement of the size of an investment manager. And Fidelity manages 2.3 trillion assets. If we turn to private equity, there can be several different flavors. There can be companies that specialize in leveraged buyouts, taking a controlling interest in a company. There can be growth equity, investing in the latter stages of these private companies. There can be private credit strategies, industry-specific strategies. A couple of examples that you'll have probably heard of in this industry: Blackstone, $450 billion AUM, and Apollo, $247 billion AUM. Remember, though, that in the previous slide, we were talking about trillions of dollars, not billions of dollars. Going down from there, we're looking at the hedge funds. These invest in a variety of assets, often using complex portfolio techniques. For example, market neutral or long short funds, quant funds. Bridgewater Associates, good example here, and AQR Capital Management, another example of a hedge fund. Both employ data very intensively to make their bets on the market. Going down to venture capital, the venture capital industry invests in the early growth stages of companies. So things like seed rounds, Series A, Series B funding rounds. They take non-controlling positions, so contrast that with private equity, where they typically take controlling positions. In venture capital, non-controlling positions in multiple companies. A couple of the best-known names in that industry are Sequoia Capital and Kleiner Perkins. Real estate, these are people who buy and invest in real estate. Think hotels, offices, multifamily, industrial parks around the country and around the world. Two flavors really here. There are publicly traded real estate investment trusts, and then there are private equity investors. Among the public real estate investment trusts, some that you may have heard of would be Simon Property Group, which owns many shopping malls, and Avalon Bay, which owns multifamily properties. Among the private equity investors, the biggest of all is Blackstone. We've already heard that name earlier, and Brookfield Property Partners, which obviously just invests in the property sector. Private banking is a slightly odd one out here, but I wanted to include it in our talk today because people do recruit at Darden for jobs in private banking or wealth management. And as you can see from the slide, we're really talking about managing the portfolio of assets for individual investors, and the people that firms like to recruit MBAs for are typically managing the assets of high net worth or even the ultra high net worth individuals. Why might you go into this side of the finance industry? Well, success is measurable and therefore can be very lucrative. So when you arrive on grounds in August, you'll notice that the name above Darden's portico is not Darden, it's actually Saunders. And that's because the money to pay for Darden came from Tom Saunders III. Similarly, on the way to Darden, you may well pass by our JPJ Arena, John Paul Jones Arena, where our basketball team plays and wins. But that arena is named, or was named, by Paul Tudor Jones, who was a hedge fund manager, and he named it after his father. So it can be very lucrative. Typical traditional investment management, not quite so. Certainly very solid jobs. Talking of solid jobs, job security can vary with the asset and employer type. The more volatile areas would be something like hedge funds. There is relative geographic flexibility in these jobs. So Boston is a huge center of investment management. New York, San Francisco, Chicago, usual suspects. Smaller firms can be anywhere. Venture capital has major centers in San Francisco, the Bay Area, and Boston in New England. Why else? Well, you're the buyer in this situation, so guess who's running around helping you do all your work? It's the investment banks. So it's fun to be the buyer rather than the service person. Why would you not take these kind of jobs? Well, again, success is measurable, and for every Tom Saunders, there are people that don't do quite so well and may end up not staying in this industry for the long haul. So that's just one thing to keep in mind. When it comes to recruiting at Darden, you'll find that turnover of staff within these firms is not nearly as high as it is in banking or consulting. So whereas the banks come to us each year looking for up to 5 people, and the consulting firms will take anywhere up to 16 or 17 people, most firms on the buy side will recruit 1 or 2, and maybe they'll do it this year and maybe they won't. So the recruiting path is not nearly as clearly defined as it is for investment banking. Some companies will come on grounds. For example, traditional investment managers like T. Rowe Price and Vanguard recruit on grounds, but many do not. These companies will often also recruit for strategic roles, not necessarily stock picking roles. And we don't see private equity and venture capital firms on grounds at all. So a mix of on-grounds and off-grounds approaches will likely be needed. There are absolutely jobs out there, but they tend to fall a little later in the recruiting cycle. So springtime rather than, let's say, January. The exception is that both JP Morgan and Goldman Sachs recruit for private banking in the same time frame as their investment banking process, i.e. early January. Whichever course you take, in this industry, networking will be absolutely essential. So a few of the clubs that you would probably look to join when you get to Darden that relate to this industry: Darden Capital Management. Now, Darden Capital Management in the second year gives you opportunities to run real money. They have about a $15 million portfolio. There's also the Private Equity Club, the Entrepreneurship and Venture Capital Club, and there are a few other clubs that may be relevant to your interests as well. The CDC team that will be supporting you here, myself, Ed Yu, who's been doing this work for 15 years, Reed Thompson, and Siobhan Dudley, who works closely with the companies, trying to get them on grounds or to post their opportunities in our system. Websites that you should start to be looking at now: obviously the Wall Street Journal, The Economist, both offer student subscriptions. Fundfire is an FT publication, focuses on the investment management industry, and PE Hub, guess what, focuses on private equity. What else might you be doing at this point in time? Well, I would suggest some books to you. The first one I would strongly recommend, A Random Walk Down Wall Street. It really sets out the efficient market hypothesis on which pretty much all investing either depends or reacts to. If you're interested in hedge funds, there's a great book called More Money Than God. And if you're interested in private equity, a book called King of Capital, which focuses on the story of Blackstone, the largest private equity firm out there. Thank you very much for your time today. I hope you've learned a little bit about the investment management, the asset management industry, and I look forward to answering your questions when you come on grounds. Thank you.